Hello, and welcome back to the channel of Crypto to Buy Now. Do you want to know about the complete guide of finding coins before they explode? Then watch this video. There are a few factors that can forecast cryptocurrency explosion and had to effectively trade these different events and announcements short-term and long-term. First step. There are steps to spot crypto before it pumps, which include initially creating a list of viable candidates. Specifically, find at least 10 coins and tokens that you think have potential. Ideally, these would be the cryptocurrencies about which you have never heard or looked into, because it will help you to be objective in asserting how much potential the crypto has. And not only that, if you stick to cryptocurrencies that crypto influencers haven't covered, that means they are still not on most people's radar and have potential. Usually, these currencies are found underground on the second, third, and fourth pages of the coin market cap. Keep in mind, the more you go down the list, the more will be the chances of risk. For that, initial analysis should be done, which involve a few things. For example, the price history of that cryptocurrency. The ideal candidate will be trending up for a long term without any strange price action, or concerning gaps in volumes. If this coin or token wasn't around during the last bull market. The second thing to look around is whether the cryptocurrency in question is a token or a coin. For example, whether the crypto has its blockchain or if it exists on another blockchain. The ideal candidate is the coin with its blockchain or token on Ethereum, Cardano, or Solana. The third thing to look for is that the cryptocurrency's exchange support centralizes exchange trading volume, and the market depth of all of these can be checked using the market tab on the coin market cap. The ideal candidate will be listed on the Qcoin at the very least, with lots of trading volume taking place on the site exchange or other reputable ones, and a decent amount of market depth spoiler. The fourth thing to look out for is a strong community, which can be easily measured by checking out that cryptocurrency social media, namely Twitter. The ideal candidate will be having a large following with an engaged community relative to other cryptos with similar size market caps. The fifth thing to look out for is robust tokenomics. Second step. The second step is to identify any upcoming events or announcements that can cause them to pump. Upcoming events are further divided into three types: unpredictable, predictable, and delayed. A great example of an unpredictable event is Avalanche's recent $230 million VC funding round AVAX predictably pumped and responsible, while it would be pretty hard to get into position before the pump happened. In the case of the predictable event, the best thing is the recent rollout of Cardano's smart contract in September. In terms of delayed events, a perfect example is Shiba Inu's recent Coinbase listing, something which had initially been scheduled for June. In any case, Shiba finally listed on the Coinbase earlier this month, and its price pumped by 50% as a result. Though there is no way of knowing for sure when that announcement would come, any shipholder who waited patiently for the pump reaped the rewards. Third step. The third step is to try and figure out how long the pump will last. As a rule of thumb, buying the rumor and selling the news is the best way to go, but as you heard a few months ago, this isn't a foolproof method always, and this is for many reasons. For starters, there is a big difference between how large cap, mid cap, and small cap cryptocurrencies behave. Most of the cash invested in large cap cryptocurrencies come from big investors, be they individuals or institutions. This so-called smart money makes calculated investment decisions. By contrast, most of the money in mid to small cap cryptocurrencies comes from retail investors like you, I, and our investment decisions are driven mostly by our emotions. What this means in the context of predicting pump is that you need to be able to think of cryptocurrencies you hold as both a VC investor and an ape. To make things easier, you can separate the candidate cryptocurrencies on your list into institutional-driven and retail-driven asset spoiler. Most cryptocurrencies come under the eighth category. Institutional-driven cryptos tend to have longer, more sustained pumps after bullish news and usually last for a few days or more. Conversely, retail-driven cryptos will have shorter, more intense pumps after bullish news which lasts for 2 days. Fourth step. The fourth step is measuring how high those cryptos could go now, and there are many different ways to measure, but the first thing you need to check is the market cap of that coin or token. The lower the market cap, there is more room for that crypto to grow regardless of its dollar value. A low market cap means it takes less money to push up its price. The second way to measure how high pumping crypto could go is to use technical analysis, specifically previous zones of support, moving averages, and various indicators. This approach is better for more mature cryptos. Fifth step. The fifth step involves deciding how much to allocate and when to take profits. The last step is to consider whether any of those cryptos has some serious long-term potential. You may come across some or most of all of the following features. First and foremost, there's the use case of utility for the coin or token that creates a constant demand for it because of its constant buying pressure should increase its price over time. Secondly, the coin or token is listed on a few reputable exchanges like KuCoin and Binance, but has yet to list on any US exchanges like Coinbase, Kraken, or Gemini. This is because most of the money flowing into crypto is coming from the United States, and as regulators continue to crack down on offshore exchanges, more of this capital is staying in the US exchanges. Thirdly, the feature with long-term potential is lots of partnerships with popular crypto projects and protocols. This is because the future of cryptocurrency is interoperability, and if a crypto project has made little to no effort to cooperate and integrate with its competitors, it will have a hard time flourishing in the future. The fourth feature of crypto with long-term potential is large amounts of VC funding, considering this VC funding comes after the cryptocurrency's main net has developed already. The fifth feature of crypto with long-term potential is constant development and innovation. This is because the crypto space is insanely competitive, and a failure to evolve can be fatal for a project. The last feature of crypto with long-term potential ties into fifth, and that's the absence of any serious competition with the crypto's niche. This is because a monopoly on a certain technology or use case is insanely profitable, as proven by Chainlink that dominates cryptocurrency's Oracle niche. They say you can't predict a crypto pump, but recently I found that these pumps usually have many of the same characteristics. This methodology can be summed up in a single sentence, and that's to pay very close attention to what's going on in cryptocurrency and be honest with yourself about what you see and what it means. With this, I would like to bring this video to an end. I hope you all found it informational. Please make sure you hit the like and subscribe button before you leave. Also, let us know your views about the complete guide of finding coins before they explode. Don't forget to hit the bell icon so you get notified every single time we upload a new video.